All right, so if you are a business owner and you're wondering, how does this whole quarterly tax thing work? When do I need to pay them? How much do I need to pay? It's confusing, it's overwhelming, and I've never done it before. You're in the right place. In this video, we're going to teach you how, when, and where to pay quarterly taxes so that you can feel like the real business owner you are and never get surprised by a tax bill again. I'm Dr. Alex Engar, your Profit Doc, and today we're going to cover three specific things. Number one, we're going to talk about how do quarterly taxes work for business owners. Number two, we're going to cover how to know if you need to pay them for this year. And number three, we're going to uncover the government's dirty little secret about what happens if you don't pay them, what it's going to look like for you in the business then. All right, so let's start in first. What are quarterly taxes? Well, I want you to imagine if you had a W-2 job and you were getting a paycheck from your employer every single maybe 2 weeks. Well, you'd have to imagine that the government is going to pull out their portion of taxes from your paycheck every 2 weeks. Why? Because the government likes cash flow just like you as a business owner. And so instead of pulling out that money from your paycheck, as a business owner, you might not have an actual W-2 paycheck yet, but the government still wants their money. And so instead of saying, yeah, let's just let you wait until the end of the year and then we'll collect from you, they say, we want you to pay us every single quarter or about every 90 days. And so because of that, the government makes you pay a certain amount every quarter, and they do expect it of you, especially when you have profit. So we're going to dive into how to know how much you need to pay and why it's really important that you do have a handle on quarterly taxes, because it can get you into trouble otherwise. So let's talk about how to know if you need to pay quarterly taxes in the first place. The easiest way to know is if you had profit last year. Why? Well, the government actually bases your quarterly estimated taxes from what your tax return says you made last year. And so when you go to file your taxes, your CPA is going to say, this is how much you owe for last year, but then this is how much your estimated taxes are each quarter for the next year. And they might even give you a little voucher that says, here's what you owe for quarterly estimated taxes. There's two different ways that they're going to calculate how much you owe. And I'm going to show you it's actually a lot simpler than you're thinking. And I also get the question all the time, well, what happens if I don't pay them till the end of the year? Because my CPA might tell me that, you know, it's fine if you just pay in a lump sum in April for last year. But you might be thinking, well, is that bad? Do I get in trouble? What is the government going to do? Are they going to come throw me in jail? Let's talk about that for just a minute. So first, while the government does expect you to pay quarterly taxes, I'll tell you there are a lot of business owners who don't pay them every quarter because their CPAs might tell them to pay it at the end of the year. Here's the thing, there is a penalty for that, but I'll let you in on a little secret. It's really not that much. On a tax bill that might be something like $10,000, you might pay a penalty of somewhere around $200 to $300 over the course of a year for not paying until April. So you kind of have to balance, you know, the government tells me I should be paying quarterly. Some people make the decision as to, you know, should I pay it at the end of the year? Here's the thing, you really need to make the decision for yourself in concert with a good CPA, okay? If you don't pay till the end of the year, yes, the government slaps you on the wrist a little bit, but it's not going to cost you all that much. So next, let's look at how much do you owe and the two different ways that we're actually going to calculate that. So the first way to calculate how much you owe for quarterly taxes is what I call the last year match method. Now, if you look that up on Google, it's not going to show up anywhere because I made that term up. But it's really simple to look at what did I make last year and what did I owe for taxes last year. So let's imagine that last year we had a tax bill of $10,000 personally. Well, I'm going to take that $10,000 and just divide it by 4 because there are 4 quarters in the year. And so that 10,000 divided by 4 is going to be $2,500. And that's what my CPA is going to tell me that I owe in the upcoming year every quarter is $2,500. That's literally how they're calculating it. It's what I made last year. But now here's the thing. You might be saying, yeah, but I made a lot more money this year than I did last year. So am I going to owe more in taxes? Well, at the end of the year, yes, you might owe more in taxes. But as long as you paid what your CPA says those quarterly estimated taxes are, that last year divided by 4, you're going to be just fine. You might owe a little bit more, but there will be no penalties as long as you follow the last year match rule. So now the second way to pay taxes. I call it the 90% method. Again, if you look it up on Google, it's not going to be on there, but here's how it works. The government says, well, maybe you didn't make nearly as much as you made last year, And so you're gonna owe less. So let's say that in this example, we owed $10,000 last year, but we're noticing that our profit this year is a lot less. And we might say, well, I don't wanna pay $2,500 every quarter. I don't have that much money. So what do I do instead? Well, then the government has an actual form that you can fill out every quarter to estimate for this past quarter, how much do you owe? And as long as by the end of the year, you've paid at least 90% of what you would have owed across the whole year, then you're just fine. So whether you're using the last year match method or the 90% method, make sure that you're making those quarterly tax payments so that you don't end up getting slapped with penalties. By the way, if you're learning something from this and you feel like, wow, this is good stuff and I want to see more of it, will you hit that like button to let us know that this kind of tax education is useful? That would be amazing. All right, so let's talk about when our taxes due. It's weird, okay? You might think these are quarterly tax payments, so they should be due every single quarter. Well, the government has kind of a weird calendar because they want to do what they want to do. But there are 4 different quarter periods that are not actually 3 months long. And by the way, I can never actually remember these myself. I always have to look it up because it doesn't follow the calendar quarters. I don't know why they make it so hard for us as business owners, but they do. All right, so the very first one is due for quarter 1. So that's January, February, and March. Those payments are due on April 15th. That one's easy to remember because it's tax day. The next one makes no sense at all, but instead of giving you an entire quarter, they say, let's just break it into April and May, and those taxes will be due on June 15th. It's not a real quarter, government, but that's how they do it. The next one is due on September 15th, and then the final one is due January 15th for the last actual quarter of the year. So it's almost aligned with the calendar quarters, but not quite, and for some reason they want to make it more complicated for us. So finally, how do I even pay quarterly taxes? Well, the government has a website. If you go to irs.gov/payments, you can make a physical quarterly estimated tax payment there. They have a bunch of different methods for it. You can cut them an e-check. You can pay with a credit or debit card. Sometimes there's an extra expense. They can pull it right out of your bank account, or you can even schedule the payments ahead of time if you don't want to have to worry about it. So now the big question is, how much should you ultimately save for taxes in order to make sure that you're not getting a surprise bill at the end of the year? Well, we have an entire tax video that you should go watch where we get into gory detail on this. But here's the quick rule of thumb. 30% of your profit. That's what you need to be saving for your quarterly tax payments. And we'll get into, in that video, how to save that much every month and where to put that money, but just make sure that you're saving 30% of your profit and you'll probably be just fine. And you might be wondering, well, if I have to pay a penalty, how does that work? Well, when you go to file taxes at the end of the year, your CPA will see here's how much you paid versus here's how much you owed. And if you do owe extra and you didn't pay it along the way, they will lump that penalty in with the rest of your tax payment. So you'll need to make that by April 15th, along with your other taxes, so that you don't have additional penalties. So now I have a free resource for you to go much deeper on understanding your business taxes, and you're really gonna wanna get this if you felt like this was useful. We have an entire deep dive tax training on the top 10 tax tips, that's a mouthful, but I can say it, for a business owner. And if you go in the link below, we'll give this workshop to you for free, along with our checklist of what you need to have top of mind as you're looking at tax planning over the next year.